Well, good morning, Vero Beach. Welcome to the Financial Pulse Radio Show. I'm your host, Danny Howell, CEO of East Coast Tax and Financial Planning. Welcome, welcome. Happy New Year. Hope everybody enjoyed their holiday, Christmas, and New Year's. We certainly did. And, now we're here to this chilly weather. I could complain a little bit. I used a car starter to heat up the car a little bit this morning, but it's nothing compared to what's going on up north. Tons of flights being delayed and all kinds of things. There's even businesses that are shutting down for a day or two because of the extreme cold up there. So we'll take this all day long. This is just heavy sweater weather, so I can live with that. And if you've just got back down, if you're a snowbird and coming back down for the winter, well, welcome. And I'm sure you're happy that you're here as opposed to up there. Well, today I wanted to talk about the largest tax legislation that has passed in our lifetimes. It's pretty tremendous. There's lots to go through. We're going to be covering this over the next couple of months just because there's so much to dig through and figure out exactly how it's going to affect each and every one of us. There are some highlights that are pretty easy and explanatory, but this just really brings it back around. The Financial Pulse Radio Show is all about educating you on your money, educating you on your investments, what's going on in the economy and the marketplace, and making sure that you understand what you have, how it works, and how it affects you. And now more than ever, it's important to make sure that you're corralling all the financial professionals in your life, because one of the misnomers that I'm hearing a lot is, oh my gosh, this is going to affect my taxes. This is going to affect my taxes. This is going to affect. Of course, it's going to affect your taxes, but that's not where it stops. This bill will affect just about every area of your financial life. If you look at some of the mortgage deduction, interest deductions that you see, is already affecting housing markets out in California and higher priced areas like New York and so forth, because they are phasing out interest deductions for homes above a certain amount, and they actually lowered that amount. So you right there's a market that's actually being affected by the tax bill. On the flip side of that, with C corporations, larger corporations, and even small businesses that file as a C corporation, meaning there's no pass-through income to your personal income tax return, your business files a separate tax return and pays its own federal income tax, those C corporations are actually capped at 21% flat tax. So what does that mean in a broader scale of things? Well, that means we could see a bump in a continuation of a thriving stock market, because corporations, as you've already seen in the news, are happy about this. They're happy about the fact that they're going to save millions upon millions of dollars in taxation. And we've seen now where they're giving employees bonuses as a result, where they're passing the love through, if you want to call it that. And that's a positive thing. And of course, more money in people's pockets, these employees getting bonuses, the more they're going to spend, assumedly. And then these corporations, the more money they get to keep in their pockets. We're hoping that translates into reinvestment into the economy in a way of more jobs, capital expenditures, and so on and so forth. So it's going to affect more than just our tax bill. Right now, we're headed into tax season, and it's a dread for many people. It's no fun to do. It's just it's one of those. It's the dental visit of finance. And no offense, Dennis. I'm sure a lot of you do a great job making people feel comfortable. But nonetheless, it's just one of those things that people just put on the last thing that they want to do every year on that list. But this year, it's kind of exciting. And the reason why I think it's exciting is because while there's not a lot of real major changes that affect 2017, which is what we're going to be preparing those taxes for, 2017, there's a lot of proactive planning going into 2018. For once, we actually have some choices and some control. Now, it's just like my father always said, when the government's putting money in your front pocket, usually they've got their hand in your back pocket. But there are some really great caveats in this bill, specifically if you're a business owner, that you really need to be aware of. And that is the major change when it comes to C corporations and how they're taxed. And even personal service corporations fall under this, where they're taxed at a flat tax of 21%, which can be significantly lower than what your corporation might be paying right now. Now, if you're an LLC, or perhaps you're just incorporated and you file as an S corporation with the federal government, meaning that it's now a pass-through entity where your business files its own tax return, and it's called an 1120S, that profit, that income on that tax return actually flows through to your personal return. They use a form called K1, and that income goes to that K1, and it's in the business owner's name, the shareholder's name, and if there's multiple shareholders, there's multiple K1s, and that income gets split up, or if it's a single shareholder organization, it passes through to the personal income tax return, and that business income gets taxed as ordinary income on the individual taxpayer's tax return. So what does that mean? Well, if you've got children, you've got homes, so you're deducting mortgage interest, you've got taxes, state income taxes and real estate taxes and exemptions and so on, and dependents and all that, and you add all those things up, your net effective tax rate might quite well be below what a C corporation's tax return or tax rate might be. C-Corp tax rates go much higher relative to the income, relative to the profit, than, say, our personal tax returns in many cases. That's why the S-Corporation is so popular, because we get to pay income tax based off of what our personal income tax net effective rate is after deductions and so forth, as opposed to paying just a flat tax that the C-Corp generates. And so that enables us to save money on taxes. It's been used for decades. It's one of the most common, most popularly used entity and filing status for small business America because of that simple fact. Well, now there's been some changes, and the game change is this new flat tax of only 21% on C corporation profit. So the question begs for those business owners that are listening, is it better for me to revoke my S corporation status and revert to a C corporation and pay that flat 21% tax? Or is it better for me to keep myself as an S corporation? Now, many S corporation businesses, people are filing as S corporations, and keep in mind, if you're listening and you're a business owner and you're an LLC, chances are you're still filing as an S corporation with the federal government for tax purposes. Many LLCs are set up that way, where on the state level in your registration, you're filed as a limited liability company, an LLC, but for tax purposes, you file as an S corporation. So if you fall into that boat, you might be in for a tax discount yourself. In fact, many companies are going to be able to take advantage of a 20% discount off of their income that passes through to their personal income tax return, which could be tremendous for people that have a significant amount of business income flowing through. So then that begs the question, which one is better? Because the C Corp is capped at 21%, which is a very attractive low rate on the headline. But then the S Corp is also going to have a reduction in what we're actually going to have to pay taxes on. So which one is best? Are you ready for the answer? Depends. Just like with anything else with the government, anything else with Congress they put together, obviously they've made it much more complicated than just a simple question. Here at East Coast Tax Financial Planning Course, we are a full-service tax planning firm. We prepare taxes, and we do books and write-ups for small to medium-sized businesses, as well as tax preparation for individuals and families. And we've already adapted our system so that we can do an analysis and identify which entity is most appropriate for you. And there's actually a deadline to change. If you're currently an S corporation, you want to change to a C corporation because it behooves you tax tax-wise, there's a deadline to do this by March. So it's not like we have unlimited time in order to be able to have this retroactive for 2018 for any type of changes you want to do as a result of this law. Well, folks, we're creeping on tax season. I want to make sure that you know that we do handle taxes here, but we do more than just tax return preparation. If you're an individual family, we want to make sure you're not unknowingly or unnecessarily overpaying in taxes. Same if you are a business owner. Give us a call, 772-774-7970, or go to our website, eastcoasttaxandfinancial.com. We'll be back in just a bit. Well, welcome back to the Financial Pulse Radio Show. I'm your host, Danny Howes. Welcome. If you're just joining our show, Happy New Year. Hope you had a wonderful holiday season. Our family certainly did. And now it's 2018, and we're full steam ahead, and we've got this tailwind financially coming our way with this largest legislation as far as taxes go that's passed in our lifetime with this tax bill. And it is significant. We talked all last segment primarily focusing on businesses and S-Corporation status versus C-Corporation status, and making sure that you're properly, that your entity is properly categorized and how you're filing with the IRS. And right now is a huge opportunity for many business owners to evaluate and make sure that you're classified properly. Because the C Corporation now, the flat tax on C Corporation profit is 21%, which is a huge discount to what it's been in the past. And like I was talking about in the first segment, everybody knows all these headlines. If you've watched the news or read the paper or social media, there's plenty of large corporations out there like AT&T and the like that are giving out large bonuses to just about every employee on their roster because they want to pass through some of that tax savings onto their employees. So we talked earlier in this last segment that this bill is going to affect more than just your taxes. As a business owner, this is going to affect more than just your taxation. As an individual, as a family, this is going to affect more than just your taxation, because this bill is a sweeping bill. It affects just about every little area of the economy. And, the market has been unprecedented this last year with all-time highs. Yesterday was an amazing day. And we continuously see that the market is loving the fact that, the new policies, regulations, and so forth that are coming out. Money has been easy for Wall Street for a long time, right? With ultra low interest rates, it penalizes savers, in my opinion. If you're a retiree and you retire and you've decided you want your money to be safer, it's very difficult to earn much interest. On the flip side of that, though, the market, Wall Street, has just taken off. They've done really well. Why? Because money has been easy. Your money has been easy, right? If banks are only paying you 1%, 2%, 3% to save your money in a safe environment like CDs and bonds and so forth, then these large corporations can go out there and they can borrow and get capital extremely cheap, low interest. And in my opinion, that's been in large part why we've seen a run up over the last couple years in the market, is that artificially low interest rates engineered by the government have really helped get this economy, or not necessarily the economy, but the market, the stock market, a kickstart. Now we're seeing that globally now as things pick up just about everywhere. And if you're in the market, chances are you've done really well over the last year or two, or even three. And going into 2018, with this tax bill as our tailwind, there shouldn't be a reason why this market shouldn't have some glimmering hopes to keep going. But we have to be cautiously optimistic. And if you're a business owner, now could be a great time to really heat things up and take advantage of what's going on in the marketplace, because as money flows, as the economy gets better, all boats tend to rise, so long as you're prepared for that opportunity. It was amazing to me this holiday season. It was amazing last year to me, but this year even more so, of just how jam-packed malls and box stores everywhere that you could spend money was during the holiday season. It's almost like euphoric that people are spending money. And, you know, not to be judgmental, but in so many cases, I'm standing in line or I'm looking around and I'm like, you know, it just doesn't seem to make sense that all these people have this much money. So we've got a bit of a credit bubble happening right now that I think we should watch out for. But let's get back to this tax bill. So we talked about S corporation versus C corporation. There has to be an analysis performed because everybody is different. Everybody's business is different. The type of business that you're in and so forth affects whether or not remaining a C Corp versus an S Corp is beneficial to you. However, let me throw this out there to you and make sure that you understand this. If you don't get anything else from this, please listen to this. It will affect you. And there could be tens of thousands of dollars worth of taxes that impact you negatively or positively as a result of this change if you are a business owner. It may be very well that you just stay the same because the benefits of the S corporation, if that's what you are right now, with the reduction of 20%, if that fits your case, then you might very well be better served to stay classified as you are right now. However, there might be instances, there's actually going to be quite a few instances where it will be making more sense to convert back to a C corporation. Or if you're a C corporation, now's a great time to also evaluate, well, you know what, maybe I have even more of an incentive to switch to an S corporation. And I wish I could give you a black and white, this is what you do if you're this or that, but that's not the case. It goes into it a little bit more. And we've got an analysis that we can perform to make sure that you're classified properly going into this year. And there is a deadline if you're a business, and that deadline, I believe, is March 15th in 2018 to be able to revoke your S corporation status for 2018 if that makes financial sense. So if you've been filing your own tax returns, this year might be a good year for you to go ahead and hire a professional to do that. If you're working with a professional and they haven't been ringing your phone off the hook to say, hey, look, we've got to evaluate your entity status and make sure that we're not going to be unnecessarily or unknowingly overpaying in taxes in 2018, then you really need to think hard about that. Here at East Coast, we've already adapted our process, and we've got an analysis program that we put together so we can make sure that whatever it is that you are, as far as your entity and how your business is classified and what type of business you're doing and the profit and revenue, we can determine which would be the best course of action for you. If you want us to help you with that, you can give my office a call, 772-774-7970. It's best to do this right now, not waiting until tax time, because accountants' offices are going to get busier and busier, and waiting until the last minute to try to make a really important decision is just not prudent. So if you want to find that out now, give us our office a call, 772-774-7970. Again, that's 774-7970. We can do an analysis for you. We sit down, take a look at your overall tax situation. Again, we do from soup to nuts everything as it relates to business accounting. We handle day-to-day bookkeeping if that's your needs, all the way to quarterly financial reviews, unlimited business consultations and so forth for people who are part of our monthly service program. And of course, we handle the tax preparation for individuals and small businesses alike. So if you're listening to this, you're saying, hey, I know there's going to be a lot of changes. I wonder if they affect me. And I want to make sure that I'm getting every single deduction I possibly can, and I'm being proactive in 2018. I highly recommend giving us a call. I don't do a lot of pitching throughout the year, but when it comes tax time, it's so crucial because saved money is earned money, right? Especially if you're a retiree or you're a business owner. You work so hard to get to where you are, only to find out that you might be overpaying unnecessarily, unknowingly in paying taxes. You can go to our website, eastcoasttaxandfinancial.com. You can actually schedule an appointment there. And we're about out of time. We're going to talk more about taxes next week. Make sure you tune in each and every week, Thursday at 10:30 a.m. right here on Waxy Radio. I'm Danny Howes for East Coast Tax and Financial Planning. Make sure you protect that money, folks, but most importantly, make sure you know who and what you're protecting it from. We'll talk to you next week.